Assalamualaikum, my name is Nur Shahira. So today our group will present about chapter 26, Internal and Governmental Financial Auditing and Operational Auditing. So let's begin with this slide, which is about internal financial auditing. This type of audit is done by people who work inside the company, but they work independently to give fair and honest opinion. Their main job is to help the company do better by looking at how risks are managed, how controls are set, and whether everything is working as it should. They follow a systematic and careful approach. For example, they may check if payments are made correctly or if the company is following its own policies. This helps management find weak areas and improve operations, which supports the company's goals. We move to another slide. This slide is about the professional rules the internal auditor must follow. The Institute of Internal Auditors, or IIA, is the organization that sets these rules. In Malaysia, it is known as the IIA Malaysia. They want all internal auditors to follow four main ethical values, which is integrity, be honest and act responsibility, objectivity, make discussion without bias, confidentiality, keep sensitive company information private, and competency, have the right knowledge and skills to do the job well. These values help auditors work honestly, fairly, keep information private, and stay skilled. The IIA also gives guidelines for how internal audits should be done. There are two kinds of standards: attribute standard, which talk about who auditors should be, and performance standard, which explain how they should do their job from start to finish. Now, let's look at ISA 610, which is about external auditor can use the work done by internal auditors. This rule is very important because sometimes internal auditors already do some of the work that the external auditors also needs. But external auditor cannot just use it without checking first. ISA 610 tells the external auditors to check the main things. First, they must check if the internal auditors are objective. This means they must be influenced by company management. They should be free to give honest opinions. Second, the external auditor must check the competence of the internal auditors. Do they have right skills, qualification, and experience? Third, they must check if the internal auditors use a structured approach. This means having proper planning, documentation, and control in place. If all these are okay, then the external auditor can use their work. This helps save time and efforts. Let me give example to understand more about ISA 610. Imagine a company called ABC Manufacturing is being audited by an external audit firm, XYZ Audit. ABC already had its own internal audit team. They have tested the company controls and written their findings. Now, XYZ wants to see if they can use this work. If ABC's internal audit reports to the audit committee have good qualification and use proper audit methods, then the external auditors can use their work. This will save time and efforts. But if the internal auditor reports to the finance manager don't have enough experience or don't follow proper audit steps, then XYZ Audit must do the work themselves from the beginning. So ISA 610 helps the external auditors decide whether they can rely on the internal audit work based on objectivity, competence, and audit quality.
Hi, my name is Faris Irfan. Today, I'll be discussing some key aspects of auditing. Let's start by understanding the relationship between internal and external auditor. As you can see from this slide, both internal and external auditors share the same fundamental similarities. For my explanation on similarities, both types of auditors need to be competent, meaning that they must possess the necessary knowledge, skills, and experience to perform their audit work effectively. They also need to maintain objectivity, ensuring they remain unbiased and independent when conducting their work and reporting their findings. Furthermore, both internal and external auditor generally use similar methodologies in performing their audits, such as employing techniques like risk assessment, testing of control, and substantive procedure. Finally, they both utilize the audit risk model and materiality concept to determine the extent of their testing and when evaluating the significance of any findings. So my explanation on the difference of the internal and external auditor is that there are crucial difference between them, where internal auditors are employees of the organization, where they audit and are primarily responsible to the management. Their focus is often broader, looking at operational efficiency, compliance with internal policies, and risk management, in addition to financial reporting. But on the other hand, external auditors are independent of the company and are responsible to financial statement user, such as investor and creditor. Their main objective is to provide an independent opinion on whether the financial statements are presented fairly in all material respects, in accordance with the applicable accounting framework such as MFRS or GAAP. The financial statement for external stakeholder. Now, let's move on to the importance of internal control. This slide highlights several key aspects related to internal control, particularly from the perspective of directors of public listed companies. Firstly, internal control provides guidance to directors in making disclosure about their company's internal control within their annual report. This is often a regulatory requirement. The points here are largely derived from the Turnbull Report 1999, which emphasized good corporate governance practices. It is crucial for directors to understand the key areas of internal control before making any statements about its effectiveness. A significant aspect is this need for proper risk assessment, as a robust internal control system is designed to mitigate identified risks. Ultimately, the goal of internal control is to evaluate the adequacy and the integrity of the company's system of internal control, ensuring assets are safeguarded, fraud is prevented, and financial information is reliable. Finally, the director are also expected to independently consider other areas specific to their business when evaluating their internal control framework, as a one-size-fits-all approach is rarely effective. Next, we look at the governmental financial auditing in Malaysia, where this slide introduces the governmental financial auditing in Malaysia, where it highlights the key players and the scope of their work. The primary body responsible for governmental financial auditing in Malaysia is the Jabatan Audit Negara or the National Audit Department. Interestingly, the Jabatan Audit Negara acts as both an external and internal auditor for government entities. The primary source of authoritative literature for the performance of government audit is the audit manual issued by the Jabatan Audit Negara itself. This manual serves as a reference guide for auditors in this sector. The scope of governmental financial audit is quite broad, covering areas such as the financial statement of governmental units to ensure accountability for public funds. It also includes scrutiny of government contracts and grants to ensure proper use of resources. Internal control within government entity is also a key focus, as is the detection and prevention of fraud. Finally, governmental audit also assess other non-compliance with laws and regulation to ensure that government operation adhere to the legal framework. So moving on to the next slide, let's briefly touch upon the Audit Act 1957. On this slide, you can see that it shows the responsibilities of the Auditor General as defined by the Audit Act 1957. Using the guidance provided in the audit manual, the Auditor General holds a significant responsibility in auditing the accounts of various entities within Malaysia public sector. This includes the accounts of the Federation and of the states, ensuring financial accountability at all levels of government. It also extends to funds established in the state or the federal territory, as outlined in Article 97 of the Constitution. Public authorities and other corporate bodies in receipt of a grant or loans from the federation or state also fall under the Auditor General's purview, ensuring that public funds are used appropriately. Lastly, the Auditor General is responsible for auditing other funds as deemed necessary, providing a comprehensive oversight of public finances. So I'll pass to my next presenter.
Hi, my name is Nurul Shazana. Now we are going to dive into the core of our audit processes and reporting requirements as outlined in our audit manual. It is built on formal guidelines, ensuring our responsibilities are fulfilled by the Auditor General under the Constitution and Audit Act 1957, establishing our clear standards basis. Key sources for the manual include the Audit Act 1957, JN's practices and experience, and standards used by accounting professions. We also integrate international best practices from the International Organization of Supreme Audit Institutions and other Supreme Audit Institutions. In short, Audit Manual serves as our foundational guide, ensuring consistency, compliance, and excellence in all our auditing activities. This is 5 financial auditing standards. The first one is materiality and significance. Next, quality control, compliance auditing, reporting, and the last one is audit files and working papers. First, materiality and significance. This is about knowing what truly matters is an audit. Our focus is on items significant enough to influence financial decisions. Example, if a mistake is big enough to make an investor change their mind about a company, then it is material. This principle ensures financial statements are free from major errors that could mislead someone. Second, quality control. This is vital for maintaining the integrity of our audit process. It involves policies and procedures to ensure audits meet professional standards. It is our internal system to guarantee excellence. These include everything from ethics, client acceptance, making sure we take on the right client, while to human resources, ensuring our team is skilled. It is all about delivering consistent and high quality work. And the third one is compliance auditing. It evaluates adherence to laws, regulation, and internal policies. In essence, we verify operation within prescribed rules. We check to make sure the company meets all the relevant legal requirements and its own internal guidelines. This is crucial for managing risk and maintaining legal standing. Next, we continue with the reporting. This is the final stage of our audit process. The auditor issues an opinion on financial statement fairness. This opinion is the auditor's judgment on whether the financial statement accurately represent the company's financial position. It is how we communicate finding and conclusion to users like investors, creditors, and management. This report is vital because it provides transparency to the financial information. And the last one is audit files and working papers. These are the details records of our work. They involve documentation of audit procedures, evidence, and conclusion. Every step we take, every piece of evidence we gather, and every conclusion we reach is carefully recorded here. This documentation is crucial because it supports the audit opinion and confirms adherence to standards. It is our proof that the audit was done properly, truly, and according to all professional guidelines. Without strong working papers, our opinion has no verifiable basis. Now, we cover reporting requirement of Audit Act 1957. On the left, we have instances where the rules and procedures have been insufficient. This insufficiency can manifest in several ways. Firstly, if we are unable to safeguard properties, assets, and stores, this points to failures in asset protection. Secondly, if there's a lack of effective checks on assessment, collection, and proper allocation of the revenues and other receipts, discover issues with revenue management. And thirdly, if we cannot ensure that expenditures have been made only as authorized, indicating a lapse in expenditure control. Moving clockwise, a report is also triggered if essential accounts and records have not been properly maintained. This is fundamental. Without accurate records, proper oversight is impossible. Next, if monies have not been fully accounted for, this directly addresses discrepancies or missing funds. Furthermore, a report is required if monies have been expended for other than for purpose for which appropriate or approved. This highlights instances of misdirection of funds against their intended purpose. And finally, if revenue collected or money expended are in contravention of laws or established policies, discover any financial activities that breach legal statutes or internal regulation. Now, we move to general guidance of auditors. Auditors need a good understanding of the Federal Constitution and other basic laws. This is our legal foundation. Also, a good understanding of the Audit Act 1957, audit concept, standard and practices. This ensure consistent and quality audits. These 2 points are essential for every auditor.
Assalamualaikum warahmatullahi wabarakatuh. So my name is Nur Shazwani binti Muhammad Fadlan. Today I would like to present about operational audit. So what is operational audit? An operational audit means checking how well a company daily works, like process, system or people is being done. After doing the audit, the auditor usually give ideas to improve the company works. For example, the auditor checks if the payroll system is working fast and correctly in a new computer system. So the auditor might also check if the company, like FedEx, is delivering letter and package quickly and if the customer are happy with the service. What can be audited in operational audit is not just about money or accounting. The auditor can check many areas like how the company is organized, how the computer are used, and how the product are made. Why operational auditing harder than financial auditing? So because it is not just about numbers, it's about how well things work and how well can mean different things to a different people. So for example, if the company ways of delivering product to the customer efficient, so one person might say yes because it fast, another might say no because it costs too much, another might say it's okay but customer service is poor. There is no one clear answer because it depends on time, cost, customer satisfaction, and also quality of service. Okay, so next is financial auditing. So what is financial auditing? Financial auditing means checking a company's money record to make sure that they are correct, harness and follow the rules. An auditor will check the company financial statement, look at the receipt, invoice, bank statement and other things, and also to make sure nothing is fake or missing. For example, if a company says it made 1 million in a profit, a financial audit checks all documents to make sure this number is true and not fake. So the goal is to gain the trust to people like investor, government, banks, and shareholders. So next, what is the difference between operational and financial audit? First, we have the purpose of the audit. So for operational auditing, it emphasizes the efficiency and effectiveness of an organization. For example, a company wants to know if their factory is running smoothly and saving money. An internal auditor check if the machine work fast, if the workers are doing tasks properly, and if there are any waste of time or material. And it focuses on improving a future performance. For example, the auditor gives advice on how the company can improve the production next year, such as using a better tools or training staff. So for the financial auditing, for the purpose is to emphasize whether historical information was correctly recorded. For example, a company hire an audit firm to check if the financial statement for the last year, like income, expenses, and also profit and loss, they are correct and follow the rules. It focuses on oriented to the past. For example, the auditor check if the company has shown the correct amount of the money earned and spent last year. It doesn't focus on the future planning. Okay, next, the difference between operational financial auditing. For the operational audit, the report is mainly for the company management. For example, company wants to improve how fast it pack and ship orders. The internal auditor check the process and writing a report for a manager to help them fix delay. While for the financial auditing, the report is for the external people like investor, government, banks or public. For example, a listed company hires an audit firm like PwC to check if their yearly financial report with a profit and loss is correct. The report is shared with shareholders and published online. Okay. For the next point, for the operational auditing is done by internal auditor, people who work inside the company. For example, staff checking if the company's delivery system is fast, while financial auditing is done by external auditor from the outside the company. For example, audit firm check if the company income is correct. For operational, for the next point, for operational auditing does have a standard format while financial auditing has a standard format. Lastly, for the operational auditing, the report is private, only for management. For example, a manager reads an internal audit report about how to reduce electricity bills and keep it within the teams. While financial auditing, the report must be shared with the public. For example, a company uploads its financial audit report to its website so investor and the public can see how it's doing financially. So for the last slide, so the difference between operational and financial auditing based on inclusion of non-financial area. For operational audit, it checks everything, not just money, like how fast the work is done or if the customer are happy. For example, check if the delivery is fast and customer are happy. While for the financial auditing, it checks only things about money like if the number in the report are correct. For example, check if the delivery cost is written correctly in the money report. That's all from me. I will pass to the next presenter. Thank you.
Assalamualaikum. My name is Fadlin Sakina binti Muhammad Zelani and I will start my presentation. So let's start by understanding the differences between effectiveness and efficiency. So effectiveness refers to the accomplishment of the objective. So for company, their objective is to produce a product without any defect. So that's effectiveness. On the other hand, efficiency is about how company produce a product without any defect but with minimum cost or minimum time. That efficiency. For example, is lean manufacturing. So I want to highlight three main factors in manufacturing, which is just in time, eliminate waste, and continuous improvement, which is Kaizen. So the first one is just in time. Okay, in lean manufacturing, they implement, which is company only produce product when there's a demand, which is they did not produce too much or too little. So in lean manufacturing, they're also trying to eliminate waste or zero wastage to keep their efficiency in producing a product. Another one is continuous improvement, Kaizen. In lean manufacturing, they always try to making an improvement so that they can produce a product in effective and efficient way. So I want to talk about the types of inefficiency in a company. So the first one is acquisitions of goods and service is too costly, which is a company may purchase raw materials that they did not require. So that one make the production less efficient, which is it will involve or increase more cost than the projected one. So next is raw materials are not available when needed. So the production will be paused, and while waiting for the production, they will incur more cost. For example, in 1 month, Usually the production can make to 200 units, but because of the raw materials are not there, so they have to wait like for 1 month. So that means they still have to pay their obligation, which is the fixed cost such as rentals, even though there's no production happen. So next is a duplications of effort by employees exist. So productions and accounting keep identical record. So this makes the record keeping is less efficient. So company can use a master file to reduce this efficiency, while both department, productions and accounting can access to the same record without record the same thing twice. So next is work is done that serve no purpose. For example, vendor invoices and receiving reports are filed without being used. And the last one, there are too many employees, which is office work could be done with one less assistants. There's no need for hire two person to do a 1% job. So that one will reduce efficiency and will increase more cost. Instead of hiring 1%, why the company should hire two, right? So effectiveness is about doing the right things, and efficiency doing the things in the right way. So next is relationship between operational audit and internal control. So operational audit is closely tied to internal control. It will ensure three major things, which is the first one is financial reports are reliable. The second one is the company runs effective and efficiently, and the third one is the organizations follows laws and regulations. The first one is how can the organization runs efficiently and effectively. So internal control can make this possible by guiding the work done. For example, our resources are being used wisely? Is there anything that's slowing down the productions? Or is there any standard procedures for approving expenses or purchases of raw material? If the operations are unorganized, money and times are wasted. So how can operational audits help these problems? Operational audits will assess if internal controls are helping the company to avoid waste, reduce delays, and getting things done in the right way. If they are not, the auditor will recommend a new way or recommend adjustment to improve workflows or cut the efficiency, which is make the internal control more effective. Secondly, how can internal control help to ensure that financial reports are reliable? This means that all numbers presented in the financial statement are fairly stated and free from material misstatements. So, what can internal controls do to make these financial statements reliable? For example, requiring two signatures for large transactions, verifying invoices before payments, and segregation of duties can reduce the likelihood of frauds and errors. If the financial statements are not reliable, stakeholders such as investor, shareholder cannot make the decision based on unfairly presented financial statement. So it could even lead to the legal problems. So what can operational audits do? So operational audit will check, are these internal control being followed, and are they strong enough to prevent mistakes and manipulation from happen in recorded and preparing financial statements. So the third purpose of internal controls is to ensure that the organization complies with law and regulations. So in Malaysia, there are many statutory requirements that companies may follow, and failing to comply can lead to fines and penalties. For example, in Malaysia, company may comply with tax regulation from LHDN or Inland Revenue Board. So company may submit or file tax return before the deadline. So internal control will ensure all the taxable income are correctly recorded and that the tax submission are approved and filed before the deadline. If the internal control are weak, a company may face with fines and penalty for missing the deadlines and will incur more costs to pay the obligation of the tax penalties. So another example, company also have to comply with SOCSO, which is Social Security Organisation or PERCASO in Malaysia. So SOCSO is like SOCSO will insure employees that work in Malaysia. So company have to make contributions for their employees, and also employees have company can deduct some amount from the employees. So internal control should track, is there any payment made to the SOCSO when the company make a deductions from the employees. So if the internal control are weak, there can be a missing of payment, result in interest charges, legal suits and denied coverage for employees. So internal control are really important to keeping the organizations legally compliant and ethically strong. So let's take a look about types of operational audits. So there are 3 types of operational audits. The first one is functional audits. So the functional audit is mainly focused on specific area, and the area can be categorized and subdivided into different ways. So one of the example of specific area that can be assessed by functional audits is payroll. So the goals is to find that payroll is running smoothly and efficiently. They want to see is the payroll calculate the salaries correctly, and is there any fictitious working time from the employees. So next we have organizational audits. Instead of focusing on a specific area, organizational audits takes a broader view, which is it looks like to the entire department. For example, might be HR department, purchase department, production departments, and to check how well it's structured, managed and aligned with the company goals. So last but not least, there is special assignments audits, which is this is a custom audit which only will conducted if the management requests. For examples, there's a sudden decline in customer satisfaction. For example, there are sudden decline in customer satisfaction for our products, and a special assignment audit will conduct and checks how to solve the problem and inform management to take actions so that the problem will be solved quickly and efficiently. So that's all from me. I will pass to the next presenter.
Hi and Assalamualaikum to Madam Astiza. My name is Nurul Batrisha. So today I'll be explaining about who performs the operational audits and the unique role played by each type of the auditor, such as internal auditors, government auditors and also CPA firms. Okay, so first let's talk about internal auditors. So what is actually internal auditors? Internal auditors are in prime position to perform operational audits. Why? This is because they are embedded within the organization. Their continuous access to records, personnel and operations allow them to evaluate the efficiency and effectiveness of internal processes more truly. They are also involved in ongoing reviews, not just one-off audits, so they can follow up on their findings and ensure that the corrective actions are taken. However, for them to be truly effective and objective, they must report directly to the audit committee or board of directors, not to the department that they audit. This strengthens their independence and adds credibility to their work. For the example, a manufacturing company's internal audit identify 20% waste in the raw material usage, which lead to process redesigns. So the practices that they can use, such as increasing use of data analytic tools for continuous monitoring. So the differences, unlike in external auditors, internal auditors can recommend for the process changes. Okay, now let's look at government auditors. Government auditors, such as those from the Auditor's General Office, conduct operational audits mainly to ensure public accountability. Their audits examine how effectively public funds are used and whether government departments comply with law and regulation. In Malaysia, this role is carried out by Jabatan Audit Negara, guided by the Audit Act 1957 and its official audit manual. These audits are often broader in scope than private sector audits, incorporating not just financial accuracy but also the achievements of program objectives and the efficient use of resources. So for the example, State Audit of Highway Construction found that 50% cost overruns due to poor contractor oversight. So in Malaysian context, Jabatan Audit Negara roles can do discussion with the Supreme Audit Institution. Performance audit increasingly focus on sustainable development goal achievement. Okay, lastly we have CPA firms. CPA firms are usually engaged when an organization lacks expertise or wants an independent evaluation of a particular function. CPA firms bring professional skepticism, industry knowledge, and external benchmark to the table. They might be hired to assess specific areas like inventory control, procurement system, or cost efficiency. Because they operate independently from the organization, their findings often carry a high level of credibility, especially valuable during external reporting, strategic decision making, or regulatory reviews. For the example, CPA firm help a retailer reduce inventory costs by 30% through warehouse layout optimization. This can be growing demand for sustainability operational audits. This also combines accounting's expertise with operational knowledge. So, in summary, each type of audit contributes differently to operational audit, such as internal auditors offer continuous monitoring within debt assess. Meanwhile, government auditors focus on compliance, efficiency, and public accountability. Last but not least, CPA firms provide independent, specialized audit with a broad perspective. This is important to understand who perform these audits and why, because this can help organizations choose the right resources to ensure their operations are not only compliant but also efficient and aligned with their goals. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Shazwana binti Muhammad Fadlan, and today I'm going to explain about independence and competence of operational auditors. They have two most important qualities for an operational auditors. First, we have independence, and second, we have competence. For independence, this means the operational auditor must be free from bias and not influenced by others, and also the auditors should not be involved in the work they are reviewing. For example, if an auditor is checking the purchasing department, they must not be friends with the staff in purchasing department or have worked in that department before. For competence,
This means the operational auditors must have the right skills, knowledge, and experience to do the audits. They should understand the company's operation, industry standard, and audit techniques. For example, an auditor reviewing a manufacturing process should know how the production works and what efficient operations looks like. Okay, now I'm going to explain about criteria for evaluating efficiency and effectiveness. First, we have specific criteria, and second, we have sources of criteria. For specific criteria are the exact things we use to check how well a task is done. They are clear and measurable. It is like time, cost, quality, or test result. For example, all payment above RM 10,000 must be approved by a manager. So the auditor can check payment voucher to confirm proper approval was given. And for the sources of criteria means the place, person, or rules that told us which things to check. It can be a boss, customer, government, or even ourselves. So for example is company policy. So the company may have a rules like two approval need for payment above RM 10,000. So the auditor use this policy as the standard when testing payment controls. Okay, next I'm going to present about plan and perform an operational audit. For specific criteria are the exact standard or question used to check how well something is working. They should be set before starting an operational audit. For purpose of specific criteria, they help the auditor focus on important points and decide if the company is doing things the right way. And some specific criteria question auditor might use for evaluating plans layouts. First, were all plan layouts approved by Home Office Engineering at the time of original design? And second, has Home Office Engineering done a revaluation study of plan layout in the past 5 years? Okay, now I'm going to explain about sources of criteria. There are four types of sources of criteria. First, we have historical performance, benchmarking, engineer standard, and discussions and agreement. For historical performance, this means looking at past record and result of the company or process being audited. Okay, for example, last year the company paid RM 1,000 for water each month. But this year, 1 month shows RM 4,000. So the auditor will check why it is more than usual. Next is benchmarking. This is when auditor compare the company's performance with other similar companies or industry standard. So for example, other shop sells 100 shirts a day while this shop sells only 20 shirts a day. So the auditor will check why this shop sells less than others. Third, we have engineered standard. Auditor can use time and motion studies to determine efficient production's output rates. So, for example, a worker is supposed to make 10 chairs in a day, but the report says the worker made only 3 chairs. So, the auditor will check what went wrong. And lastly, is discussion and agreement. This party involved should include management of the entity to be audited, the operational auditor, and also the entity or person to whom the findings will be reported. So, for example, the company and the auditor agrees that all money spent over RM 500 needs a receipt. So, the auditor check if the workers follow the rules.
Assalamualaikum and hi, my name is Putri Nur Sabrina Binti Basri. I will be presenting about the phrases operational auditing. There are three crucial most important phrases set in operational auditing. The first one is planning, the second is evidence accumulation, in which get all the evidence for auditor to do the auditing, and the last is follow up part. The first important part is planning. Planning is almost every single step that all the auditors need to do. We need to plan our step before we do the auditing process. So, auditors are required to spend more time for the interested parties agreeing on the terms of engagement. First, the scope of engagement. We need to know what is the scope of auditing in the operation phases that we are going to do. Second, staffing. The third is background information. We need to know the background of the information of part we are doing the audit. We need to know what is the history behind it. The fourth is understanding the internal control, because auditing we are doing the external control, we need to know the flow of the internal control. The last one is to decide the appropriate evidence, in which I will explain in the second part, which is we will accumulate all the evidence in phases of the operational auditing. The second part of the phases in operational auditing is we accumulate all the evidence. We do evaluation, evidence accumulation, and evaluation. Why? Because accumulate sufficient appropriate evidence and decide whether it is reasonable to conclude is the most important step, is the most crucial part in auditing. We need to accumulate all the evidence, we need to analyze it, and we need to evaluate it whether it is right or it is wrong flow that happened in the company. First, we need the documentation to check all the documents are related to our auditing. Second, client inquiry. We need to inquire the clients with the question that's suitable with our part to do auditing. Third is analytical procedure, and the fourth is observation. The last process phases in operational auditing is for sure reporting and follow-up. Is the same procedure for all auditing process too, which in this part, two major differences in operational and financial auditing report need to be detected. First, in operational auditing report is usually sent only to management, and the second one is tailoring of each report is required in operational audit, in which we need to make a report that tailor with the requirement needed for the operational level. Next is the example of operational audit findings. First example is outside janitorial firm save $160,000, which is it is about an auditor review the efficiency and effectiveness of the janitorial services furnished by state employees for the building in the state capitol complex. So what they did is the auditor disclosed the cost of janitorial service were excessive compared to the similar service performed by outside janitorial firm. The auditors found that many tasks were not complete and result to unaccepted quantity. So the auditor recommend that the state seek competitive bids and contract with the janitorial firm, submitting the lower bid that meet the specification. The resultant contract actually saved more than $160,000 a year, and the quality of cleaning improved noticeably. Next is use the right tools. A company lists 25 duty trucks for use by service employees who install and repair about 20,000 vending machines. All the trucks are equipped with hydraulic lift gates for loading and unloading vending machine. So what they did, most of the trucks are used for service call, which consists of on-the-scene repair of the machine, which is not requiring the hydraulic lift gates. The auditor recommend most of the heavy-duty truck is pieced out and replaced by conversion like van. Management agreed, and the saving in lease rate and operational expenses were estimated at $25,000 a year. The third example is computer program save the manual labor. The Federal Employee Retirement Income Security Act requires internal audit to test annual audit of profit sharing plans. The IT auditor developed several computer-assisted audit programs to test control over enrollment in and termination from the company's profit sharing plans. The company assistant saved manual labor and detected several employees who were not eligible for the plan, such as the terminated employee still in the plan, and also detecting conflicting data between the payroll and profit sharing plans master file. When shown the result of the audit, the management collected all the problems and made an additional control to prevent the problem in the future. The last example is Company ABC, a manufacturing firm, conducted an operational audit to identify areas of inefficiency and improve their production process. The audit revealed bottlenecks in their supply chain and identified opportunities to streamline inventory management. By implementing the recommendation from the audit, Companies ABC was able to reduce production costs and optimize inventory level and improve overall operational efficiency. That's all from us. Thank you.